Welcome back. I'm Raj, and today we're tackling a topic that makes everyone groan: taxes. Tax season can be stressful, but knowing how to avoid common mistakes can save you real money. The IRS isn't out to trick you, but the system is complex. Missed deductions or the wrong filing status can cost you hundreds or thousands. Today, I'll break down 5 critical tax mistakes and give you practical tips to keep more of your hard-earned cash. Grab a coffee and let's dive in. This is info you can't afford to miss. Let's start with one of the most expensive mistakes: missing out on deductions and credits. Deductions and credits are your ticket to a lower tax bill, but you have to know about them and claim them. The IRS won't remind you if you forget to deduct student loan interest or claim an education credit. For example, student loan interest is deductible for many, not just recent grads. Don't skip it. Medical expenses can be deductible if they exceed 7.5% of your AGI. Track every bill, prescription, and even mileage to appointments. Education credits like the American Opportunity Tax Credit and Lifetime Learning Credit can put real money back in your pocket, but only if you know to claim them. Self-employed? Don't forget home office deductions, retirement contributions, and health savings accounts. Even teachers can deduct classroom expenses, and charitable donations can add up. Missing several deductions over the years can mean thousands lost. Be thorough. Don't just skim your tax software. Read instructions, use help features, or consult a pro if you're unsure. Tax laws and your life change. Review your eligibility every year. Some deductions lower your AGI, which can unlock even more credits. The bottom line: actively hunt for every deduction and credit you qualify for. Don't leave free money on the table. Whether it's student loan interest, medical expenses, or education credits, do your homework. The effort can mean a smaller tax bill or a bigger refund. This is the foundation of smart tax filing. Keep records of all potential deductions throughout the year. If you're unsure, a tax professional can help you find savings you might miss. Over time, these savings add up. Don't give the government an interest-free loan. Remember, claiming one deduction can help you qualify for others. It's a strategic game. Know the rules. Review your situation every tax season. Don't assume last year's return covers you this year. Take control and claim what you're owed. That's how you keep more of your money. Next up, filing late or not at all. A mistake that can cost you big. The IRS is strict about deadlines. Miss them and penalties pile up fast. The failure to file penalty is 5% of unpaid taxes per month, up to 25%. That adds up quickly. There's also a failure to pay penalty. 0.5% per month, also up to 25%. Interest compounds daily on top of these penalties. If you're due a refund, you have 3 years to claim it. Miss that, and your money is gone. Not filing at all. The IRS will eventually notice. They can file a substitute for return for you, usually without any deductions or credits, resulting in a much higher bill. Ignore IRS notices, and they can garnish wages, levy bank accounts, or put a lien on your property. The solution: always file on time. Mark the deadline, usually April 15th, on your calendar. If you can't finish in time, file for an extension. But remember, an extension to file is not an extension to pay. Estimate and pay what you owe by the original deadline to avoid penalties. If you're behind on past years, don't ignore it. File as soon as possible. The IRS is more lenient if you come forward voluntarily. Procrastination with taxes is expensive. Don't let it cost you. If you're overwhelmed, get help from a tax professional. Filing late can turn a manageable tax bill into a financial nightmare. Even if you owe and can't pay in full, file anyway. Penalties for not filing are worse than for not paying. Set reminders, stay organized, and don't let deadlines slip by. If you're due a refund, file promptly to get your money. Don't let fear or confusion keep you from filing. The IRS has payment plans if you can't pay everything at once. Take action early to avoid bigger problems later. Filing on time is the simplest way to avoid unnecessary costs. Don't let a missed deadline drain your wallet. Stay proactive and protect your finances. Remember, the IRS has powerful collection tools. Don't give them a reason to use them. File, pay, and move on with peace of mind. That's how you stay out of tax trouble. Now let's talk about reporting your income accurately, because mistakes here can trigger an audit. The IRS matches your return to W-2S, 1099-S, and other forms from employers, banks and clients. Forget to report a side gig or investment income? The IRS will notice. Even small amounts from freelance work or gig apps must be reported, whether or not you get a 1099. Keep records of all income sources, full-time jobs, side hustles, investments, rental income, and even cash payments. Investment income is tricky. Report both the sale price and your cost basis for stocks or property. Double-check every number from your W-2s and 1099s. Typos can trigger IRS notices. If you get a corrected form after filing, amend your return, don't ignore it. Underreporting income is tax evasion, not just a mistake. The peace of mind from honest, accurate reporting is worth it. Gather all your income documents before you start your return. Don't guess, wait for official forms. If you're unsure about reporting something, ask a tax pro. Transparency keeps you out of trouble and avoids costly surprises. Think of accurate reporting as financial hygiene. Don't give the IRS a reason to look closer. File clean, file right, and move on. Let's talk about record keeping, a boring task that can save you thousands. Good records are your best defense if the IRS asks questions. To claim deductions, you need proof receipts, bank statements, or written acknowledgements. For business expenses, keep detailed logs, especially for mileage, home office, and supplies. Charitable donations, keep receipts or bank records, and get written acknowledgements for larger gifts. Medical expenses, save every bill, prescription, and mileage log. Investment sales, track purchase dates, prices, and sales for accurate capital gains reporting. The IRS generally recommends keeping records for 3 years, but longer for certain situations. Digital storage makes this easy. Scan and save everything. If you're audited and can't prove a deduction, you'll lose it and pay more tax, plus penalties. Make record keeping a year-round habit, not a last-minute scramble. Set up a system, folders, apps, or accounting software. Every receipt is potential cash. Don't throw it away. Organized records mean you get every deduction you deserve. If you're self-employed, this is even more critical. Don't let sloppy books cost you big. Invest a little time now to save a lot later. Good records make tax time easier and less stressful. Commit to better record keeping this year. Your future self will thank you. The last big mistake? Choosing the wrong filing status. Your filing status affects your tax rate, standard deduction, and eligibility for credits. There are 5 main statuses: single, married filing jointly, married filing separately, head of household, and qualifying widower with dependent child. Each has specific rules. Don't just pick what you used last year. Single is for those unmarried or legally separated, but if you support a child or relative, you might qualify for head of household, which is usually better. Married filing jointly is often best for couples, but both spouses are responsible for the return. Married filing separately can make sense in rare cases, but usually means higher taxes and fewer credits. Head of household offers bigger deductions and better rates for those supporting a dependent. Qualifying widow (ER) is for those with a dependent child after a spouse's death, for up to 2 years. Life changes, marriage, divorce, a new child can change your status. Tax software helps, but you need to answer questions accurately. Don't guess, review your situation every year. The right status can save you thousands. If you're unsure, ask a tax professional. The wrong choice can ripple through your whole return. Take time to get it right. Your filing status is the foundation of your tax return. Choose wisely for the best outcome. Don't let a simple checkbox cost you money. There you have it. 5 tax mistakes that can drain your wallet if you're not careful. Double-check your income, deductions, credits, and filing status before submitting your return. A few extra minutes of review can save you big headaches and big money. If you're unsure or your taxes are complicated, consult a pro. It's often worth it. If you found this helpful, like and subscribe for more financial tips. Stay savvy, file smart, and I'll see you next time.